OND follow historical performance. Hello everyone, this is Ahmed Saleh and this is the weekly market recap. And now to the details. So the key messages: the market resumed climbing up, having the best September in years. Market is also ignoring the government shutdown. OND is historically the best quarter in the year with an average return of 6.6%. Will this happen this time? Let's see. Valuation is historically high. And now to the details. So we closed September with 3.6% versus minus 2.2% for the 10 years median return. OND is historically the best quarter in the year, closing with about 6.6%. But we have to take care because this year was not a normal year. So we have seen that in Feb, March, April, the market declined while the historical performance was up. We have also seen that in September, the market performance closed at 3.6 while the historical performance is minus 2.2. August is the same thing. So this year is not a normal year because of Trump, because of the tariff, because of a lot of other things. So will OND follow the historical performance? That's what we need to see. So far, we take the history as a guidance, but we don't treat it as something that will or should or have to be done. These are always a guideline for us, but we are flexible to take whatever the market will give us. Now, what about the shutdown? It had zero effect on the market last week. And this is in line with the previous history as well. So these are the history for the government shutdown since 1976. And you can see that the average is 0.3% gain. And we have 54% for having higher S&P 500 when there is a government shutdown. Right? If you look to 12 months after the government shutdown, you have 12.7% gain, and we have 86.4% chance that the market will go up after 12 months. The market doesn't care about the shutdown. Okay, so don't put it like, okay, there is a shutdown, I will not go to the market. Now, what you need to take care about is the valuation. The valuation is very high relative to history. It's even bigger than what we had before in the big recession in the 1930s. We are now talking about an average of 30 BE ratio, while the median is about 18, 19. We have only 3 incidents in the past that were higher than where we are right now. The first one was the dot-com bubble in 2001. The second one was the financial crisis in 2009. This is historically high because the earnings went down and the price was high. And we had this as well during COVID time when the earnings went down and then the valuation went very high. Okay, so now the valuation is high, but will this prevent me from going to the market as a trader? No, it will not. Will this prevent me from going to the market as an investor? No, it is not. Why I'm saying this? Because as a trader, you know when to get out. So you'll get out when there is a crisis that's beginning to happen. I will show you now how to detect this. And as an investor, you just invest in the market regardless of where the market is, using the dollar cost average, investing every month, fixed amount of money over a long period of time, you are going to win. Now, even if you look at the forward BE, which taking the forward earning into account, latest we have 22.8 and the 30 years average is 17. We are still higher when it comes to the BE, even if you use the Schiller BE, which is like 10 years average, we are still higher. So if you take any metrics, we are higher. But again, this will not prevent us from going to the market, neither as a trader, neither as an investor. Now, how do you detect if the market is going down? So this is a chart of the S&P 500. And for me, for the short-term trader, the moving average 21 is a key support level. So if the S&P 500 crossed down the moving average 21, which is now at 6,620, then this is a clear exit point. For investor, they can choose the 50 days moving average, which is now at 6,500. The 200 is far away at 6,000, so this is about 10% down. But you can also, for long-term investor, you can choose the 6,000 as an exit point. But for me, I will go out at the 21 days moving average. Moving on, next week, keep an eye on the government shutdown. It doesn't affect, but there are some reports that we didn't have last week. Maybe we'll get it next week. We have September unemployment. It was delayed from last Friday. So even if there are good news during the week that the government is back to work, we will not have this report until next Friday. My strategies are the same. Stocks breaking of 52 weeks high, or at all-time high, and the stock rebounding from the key support level. Now let's see what happened to the stocks that we were following in the last couple of weeks. So Seagate went up by 16%, and then you have to ask yourself if you are not in Seagate. Why? Because it was doing well all the month of September. We recommended this stock when we were about the 152. Now we are at 250. So we have a gain of about 60-70%. So you need to ask yourself if you are not in this stock, why? Because we recommended this at the beginning of September and it was doing very well. Next one is the GDX, again doing very well, going up by 3.1% last week and cumulatively 15% over the month of September. So that's again doing very nice. Next one is KGC. KGC again is doing very well. It's following the gold as well. Went up by 3.5% last week. So very good performance. Next one is the gold itself. And it went up last week by 3.1% and doing very well in the last month. Next one is CrowdStrike. We said that we have a support around the 465. And as long as the stock is above this level, then it is fine. The next one is Grail. We talked last time that we have an overhanging supply around the 51 and it crossed the 51 very strongly. But again, this candle that we have is a very negative candle. It's an inverted hammer and it can indicate that this is the end of the rally. So watch out. If we get another red candle after that, then this is a bad sign and you should go out. If you didn't get out on that day, because the drop on that day from the highest point is more than 10%. Ideally, you should have went out during that day, but if you didn't go out, then any red candles after that, you should go out. Because last week, even with this decline, it has done 32%. Cumulatively, we were going into this at around 32 and the stock now is more than 60, so it doubled in less than a month. It's a very good performance, and I think it's time to cash out of this if we get another red candle. Next one is Sound. Sound, as we said, there is an overhanging supply around the 20, so we need to cross the 20 in order to continue going up. The exit point is at the 16.8 or at the cross of the 21 days moving average. As long as we are above this, there is a chance that we're going to go up again and cross the 20. Rocket Lab, we said last week that as long as we are above the moving average 50, then we keep it. If you manage to keep it throughout this tough time, then you got rewarded. The stock climbed up last week by 19%, and you would be now having some gains. And that's because we have seen that there is a cup and a handle and another bottom here. So it's the double bottom as well. So it's a very good chart pattern here. So if you are still in, so good job and enjoy the reward. Next one is AB. AB is doing plus 2%. So it's fine. We have a support level at the moving average 10. So you can exit if this support was broken because the 21 days moving average is far away. It's like 60 point far away. So it's about like 9%. I wouldn't wait until we touch the 21 days moving average. I would go out at the break of the 10 days moving average. And this is take it as a rule. If the 21 days moving average is far away, or if your support point is far away, just pick another support point or another closer point, another moving average, so that you don't waste the profit that you have done. Web is doing well, plus 3.8%, is doing very nice. And there are three more stocks that I want to talk about. The first one is the Bitcoin. Bitcoin, I use the IBIT or I use GBTC. Both are the same. We are now at all-time high resistance, which is around 70. So the buying point will be at the break of this point. Put it in your watch list and keep an eye on this. The next one that I want to talk about is silver. Silver is doing very good, so keep an eye on it and you can go in. Last one I want to talk about, and this was the star of last week. The healthcare sector was lagging all the year, was not doing very well, but last week it was the star of the week and it was climbing up very well. So we have some resistance here from the 144 to the 150. If we manage to break that resistance, then it can catch up with the rally. That was it for this week. Thank you very much. I wish you a profitable trade. And if you like the video, please press like, share it with your friends, subscribe to the channel, put any question in the comment. And this video is for educational purpose only and should not be considered as a financial advice. Thank you very much.